The price of Bitcoin and the crypto industry as a whole will go up exponentially in value in, I would say, the quite short term in the grand scheme of things. And I want to talk to you about today on why that's going to happen and how you can profit from that potentially. On top of this, we want to go into the price action for Bitcoin, talk about what is happening on the daily charts and what the update from yesterday really is. If those topics sound interesting to you, then make sure to destroy the like button on today's video. That would be incredibly appreciated. If you're not subscribed yet, make sure to subscribe for daily update videos here on this channel where you get to know everything that you need to know about the crypto markets. If you have done that, then let's go into the price of Bitcoin and then I'll explain quite an interesting concept to you following the Bitcoin price analysis. So 11.9 was the magic line we've been talking about in the past two videos. And I said, I'm not panicking until or if this line to the downside is broken. I'm still long on weeks. I'm still having my Pinex spots, which are buying the dip for me on both Bitcoin, on AVAX, on Dogecoin. I'm fine. In fact, even on the Moonshow account, my bot on the CryptoKid account was buying until 12.5, which we're above now. But on the Moonshow account, I have a trading bot that's buying potentially all the way down to 107.5 if Bitcoin decides to break this red line to the downside. But so far, there's no reason for me to really panic unless this red line is broken down. It's a critical line. We spoke about its importance over the past two videos. So I won't repeat it, but you can clearly see why it is very important. If we can see a sustained push above $17.9 thousand, then all-time highs for me, will be very much expectable. But if Bitcoin fails to do that and we break below, 107.5 will be the final area of support to push Bitcoin and continue on for one final leg to the upside. The bull and bear market support band is also very active. It's still very much active. It's there as support. We spoke about the 20 simple moving average giving Bitcoin support additionally to this red line. Overall, not concerned. Ethereum to me looks more concerning. You have the triple top. When you go into the very short-term timeframes like this time frame, look at that. That just appears as a massive bear flag. I don't like this consolidation that we're seeing. If you look at the price of Bitcoin, Bitcoin at least is seeing a bounce. But when you go to Ethereum, you're not seeing that bounce. Ethereum is looking weak. To me, $3.9 thousand is on the table. And over on weeks, I will be buying Ethereum if we do see a drop to the 3.9K level. If you want to trade Bitcoin via trading bots or weeks, make sure to go to the two links in the description down below to get incredible bonuses when you do sign up and to support the channel. So with that said, that's Ethereum and Bitcoin. Now let's get into why we're going to see, in my opinion, an exponential rally to the upside for both Bitcoin and cryptocurrencies in the long term. So this all funnels back to two things. One of them is stablecoin adoption, and number two is interest rates. When you look at the current Trump administration, their monetary policy stance or their ambitions for monetary policy is having ridiculously low rates when inflation is at a higher level. Why do they want to do this? By doing that, what they force into the market is a concept where the value of the dollar weakens because you're making more and more money available into the market for a cheaper cost when you reduce interest rates. And when inflation is high, particularly when inflation is high, that doesn't really lead to any positive outcome. But in general, when you reduce rates, you make money available for a cheaper cost. So more and more money is printed. And because there is more of that money, its value reduces to the downside. Why do they have this agenda? Well, they have this agenda to make sure that goods and services or goods are produced locally in America, and America doesn't import all of the things that it needs. It actually builds them and produces them and manufactures them locally in America, and that will have a good impact on the labor market. It's just in the short term, there can be market turbulence, but as a macro goal, I actually don't think it's too bad. While you're doing this, though, you're going to make the dollar less valuable. When the dollar is less valuable, people are forced to produce locally because when the dollar is doing well, it's just much more convenient to buy goods from overseas and import them. You don't need to go through the hassle of investing, into industry, building factories. None of those seem to be necessary when you can just import things into a country. But over the long time, when you don't manufacture things, you become dependent. And as soon as countries don't want to give you their goods anymore, then you're left into a tight spot. So I can understand that goal of producing things locally. The point we need to focus is on the reduction of the value of the US dollar. That's where it ties into. When you stop the dollar becoming valuable, you force production within America. Another thing that they're doing, in my opinion, to reduce the value of the dollar is supporting stablecoin adoption. They recently signed the Genius Act, which legitimizes and governs stablecoin issuers. When you make stablecoins available digitally to potentially everyone across the world, specifically countries that are going through hyperinflation when their own currencies aren't stable, it becomes an attractive financial vehicle to residents or citizens of countries of hyperinflation, where instead of saving or earning local currency, employers, multinationals particularly, or the individual may choose to earn the stable coin. Because if they receive their own local currency, there's a very good chance that by the end of that year, their own currency falls down by 20% in value. There's inflation on top of that. So your purchasing power diminishes and the value of the actual cash you earn also goes down into the toilets, forcing you into poverty unless you're making a lot of money, right? So people will naturally choose to earn stable coins as it's tied to the US dollar, and the US dollar is more stable than the currencies of hyperinflationary countries. And I think that's where the adoption is really going to begin. And I just think the American companies will create a comfort zone of convenience for payments in stablecoin. You'll have lending available in stablecoin, giving you attractive interest rates. They will do, I think, a good infrastructure to make people adopt stablecoins. It's good for two things. One, it's good to reduce the value of the US dollar. The more you make something available, the less valuable it becomes. When the dollar is less valuable, natural stores of value like gold and Bitcoin, they appreciate to the upside. The dollar becoming less valuable because there's more of it means that global liquidity increases. We know that Bitcoin is very much correlated to global liquidity. So is the stock market, so is gold, etc., etc. So Bitcoin, crypto markets, they go up because of that. Number two, stablecoins are good because you're increasing the interoperability of money. What does that mean? If average Joe wants to go and invest into cryptocurrencies, he traditionally keeps his money in his bank account. So he would have to create an exchange account, link his bank account to the exchange account, figure out how to do a bank transfer from his bank account to the exchange, which he's going to be hesitant to do because people are, even if it's okay to do it, people are scared of new concepts and people are scared of potentially losing their money. So he's likely not going to do that anyways. But if he wants to do it, he's going to pay fees for transferring into the exchange. And when he wants to off-ramp his profits, he's going to pay capital gains tax and he's going to pay fees when he brings it back. There's going to be a Forex charge, so on and so forth. So for the average Joe to invest into cryptocurrencies, it is difficult. There are so many barriers to entry. And sometimes not everyone in the world, because of their nationality, because of where they live, they can't invest into cryptocurrencies. But with stablecoins, since they will be blockchain-based products, with your earnings in stablecoin, you can connect to a decentralized exchange, potentially, and just go ahead and buy whatever cryptocurrency you want to. Or you can go ahead and buy a tokenized stock, or you can buy tokenized gold. So there's going to be increased interoperability of money where it will be much more easier for people to spend the money they receive into investments. And the narrative of the dollar value now capitulating because of interest rates and stable coins will be a hot topic. So people will want to reduce their dollars, invest into things like Bitcoin and crypto to hedge themselves against inflation. So that's why stable coins are additionally good. And how does that translate actually into the price of Bitcoin? Well, the translation occurs when the dollar gets significantly devalued. The prices of risk on assets in Bitcoin increase, right? That's the correlation between Bitcoin and global liquidity. But the thing that people don't understand is one simple concept. It's actually not the price of Bitcoin going up. No, Bitcoin remains stagnant. When Bitcoin goes to $300,000, in, let's say, this is a complete hypothetical scenario, in the year 2030, actually, when you go to 2025 money, 2025 money of $113,000 is going to equate to $300,000 anyways. So Bitcoin wouldn't have gone up in value. Bitcoin would have stayed in value. It's just the value of the dollar would have decreased. Hence, the value of Bitcoin against the USD would have gone up. But one Bitcoin is always one Bitcoin. So Bitcoin is a tool to protect your capital from inflation and monetary devaluation, while sometimes giving you an actual additional increase apart from protecting your capital. That's what's going to happen. That's why Bitcoin will go to millions of dollars. It's just that millions of dollars in 2050 money is going to be likely equivalent to $100,000 of today's money. That's what you need to understand. When you go to M2 money supply, M2SL, go back to the prior bull market. If you remember, they printed so much money in the last bull market. They doubled the amount of US dollars available, and that caused the price of Bitcoin to go up by sixfold. If money is printed, there's more of money, it reduces the value of money. So things priced in that money naturally go up in value. That's what's going to happen. They're going to print more and more and more money. The US has currently $37.5 trillion of national debt. 7.6 trillion of that they need to pay this year. Private stablecoin companies are helping with that by buying treasuries, but they're going to have to print more and more money to pay off this debt. And actually, there's another solution too. The whole strategic Bitcoin reserve concept makes sense for America, because if they were to, let's say, sell their gold to buy Bitcoin, we know that a lot of foreign countries have a bunch of gold reserves. If America was to dump all of its gold holdings and transfer that into Bitcoin, there would be a huge extraction of liquidity from gold that would be put into Bitcoin, which would cause foreign countries to lose a lot of their wealth. But for America's terms, because they would have bought in massive chunks of Bitcoin in a short period of time, the market capitalization of Bitcoin would fly to the moon. Therefore, their investment in Bitcoin would also fly to the moon. If the dollar value depreciates and suddenly they're very rich from their Bitcoin investments, then the national debt doesn't become so impossible to pay off. So what if this is the entire plan? To buy Bitcoin, sell their dollar reserves, so sell their gold reserves, reduce the value of the dollar to already reduce how much the US national debt is really worth, buy a bunch of Bitcoin, become Bitcoin rich, and use Bitcoin to pay their national debt off. What if that's the plan? I know it sounds conspiracy theory level, but you're seeing it. The Trump family is buying Bitcoin themselves via their companies. They're fully into crypto. They want to do a Bitcoin strategic reserve. And this is the only way that this whole thing makes sense. So anyways, I thought you may find this video interesting. And overall, it's just good for our industry until they decide to liquidate their Bitcoin to pay off the national debt. But until then, it's good. It's good. So I'm excited. But guys, thank you so much for watching. Have a fantastic rest of your day, and I'll see you all on the next video very soon. Take care, guys. And as always, bye-bye.